If you've ever sat down with a financial advisor or reviewed your bank statements, you might have noticed the word interest coming up a lot. Whether it's savings, loans, or investments, the financial world is built on this concept. But there's a darker side to how the banking system works when it comes to building wealth. Most banks, financial institutions, and even traditional investment strategies aren't exactly designed to make you rich. In fact, there are some important facts that banks would rather you didn't know about the secrets to building wealth. In this guide, we'll explore the top 10 things your bank doesn't want you to know about wealth building, from the strategies the rich use to how you can take control of your financial future. You'll see that it's not all about saving pennies or relying on a high-interest savings account. Some secrets can actually help you accelerate your wealth-building journey, while others show how you've been held back by the very system you trust. 10. The power of compound interest. You're doing it wrong. Banks love compound interest. It's the silent force that builds their profits. But for you, the investor, it can either work for or against you. While it's often touted as the key to wealth, most people don't understand how to maximize it. The average savings account interest rate is far below inflation rates, meaning your money is actually losing value over time. The key to using compound interest effectively is to invest, not save. Rather than keeping your money in a low-interest account, you need to put it into assets that grow faster than inflation. Stocks, real estate, or even bonds can offer returns that far exceed the paltry gains offered by traditional banks. 9. Banks benefit from your debt, but you should be avoiding it. Debt isn't always bad, but banks certainly want you to think it's a normal part of life. Credit cards, personal loans, and mortgages all help the banks rake in billions, and the higher your debt, the more they profit off your interest payments. The truth? Wealthy individuals use debt as a tool, smart debt, which is used for leveraging investments like real estate or business ventures. On the other hand, bad debt, like consumer debt from credit cards or auto loans, enslaves you to the bank. If you want to build wealth, reducing or eliminating bad debt should be your first priority. Banks don't want you to know that financial freedom comes from not being weighed down by high interest payments. The less you owe, the more you can save and invest. 8. The bank's savings account is not your friend. It's a common belief that keeping your savings in a bank account is the best way to protect your money. But the bank's savings account is a poor tool for building wealth. Interest rates on savings accounts have remained stagnant for years, and in many cases, inflation is outpacing your returns. That means your money is effectively losing value the longer you keep it there. Instead, consider investing in assets that will outperform inflation, such as stocks, real estate, or starting your own business. You can still keep some liquid assets in a savings account for emergencies, but your wealth-building strategy should be focused on higher returns. 7. Financial advisors are often more interested in commission than your success. The wealth management industry is full of professionals who claim to be working in your best interest, but many of them are more focused on collecting their commissions than actually growing your wealth. This is especially true when they push high-fee products such as actively managed funds, which tend to underperform compared to low-cost index funds. The financial industry makes money when you invest in expensive products. But what they don't want you to know is that you can often get better returns by focusing on low-cost investments like index funds or exchange-traded funds, ETFs, which track the performance of entire markets rather than relying on a manager's expertise. 6. Real estate can be a powerful wealth-building tool. Real estate is one of the most powerful tools for building long-term wealth. However, banks often make it seem like real estate is an option only for the rich. What they don't want you to know is that with the right strategy, real estate can be a game changer for almost anyone. When leveraged properly, real estate allows you to use a relatively small initial investment to purchase property that appreciates in value over time. Rental properties can provide consistent cash flow, and you can build equity in your property, all while the value of your investment grows. 5. You don't need to be a millionaire to invest. Like one, banks often promote the myth that investing is only for the wealthy. They sell you the idea that building wealth requires starting with a large sum of money. But the truth is, you can start building wealth with just a small amount of capital, especially if you take advantage of the power of compound interest, long-term investments, and smart financial strategies. By investing in stocks, bonds, mutual funds, or real estate, you can begin to grow your money, even if you're just starting out. The key is consistency. Small contributions over time, when invested wisely, can snowball into substantial wealth. This is a strategy the rich use, and it's one you should adopt as well. The stock market is not just for Wall Street elites. For years, banks have perpetuated the idea that the stock market is a place for elite investors and professionals. They'd like you to believe that navigating the stock market is too complex for the average person. The truth? With modern-day tools and access to information, you can invest in stocks, ETFs, and mutual funds with minimal risk and effort. Low-cost index funds have made it possible for almost anyone to invest in the stock market and see long-term growth. Whether you're a beginner or a seasoned investor, the key to stock market success is long-term investing and diversification, not trying to time the market. 3. Building wealth starts with building financial literacy. One of the biggest secrets banks don't want you to know is that financial literacy is the first step toward building wealth. Understanding the basics of how money works, how to save, invest, and manage your debt is a skill that can unlock financial freedom. But for many, it's not something they teach in schools. Banks thrive on your ignorance, and many financial products are designed to be complex and confusing. But with the advent of the internet and countless free resources, building financial literacy is more accessible than ever. If you want to build wealth, you need to first understand where your money is going, how to make it work for you, and how to avoid costly mistakes. 2. You can build wealth without relying on banks. While banks provide essential services, you don't need them to build wealth. You don't need a savings account, a credit card, or a loan from a bank to start building your financial future. In fact, the more you rely on banks, the more they profit off of you. Instead of relying on traditional banking services, focus on building alternative income streams through investments, side businesses, or real estate. Banks want you to be dependent on them for loans and credit, but independent wealth-building strategies such as passive income or entrepreneurship allow you to create wealth without them taking a cut. 1. You are the most important investment you can make. Finally, the most powerful secret that banks don't want you to know is that you are your most important asset. Investing in yourself, whether through education, skills, or personal growth, is the key to long-term financial success. Your ability to earn, invest, and leverage your knowledge is what will allow you to build wealth over time. This means prioritizing your health, developing new skills, building strong relationships, and taking care of your mental well-being. The wealthiest people in the world didn't get there by relying on others. They took control of their own future and invested in themselves. Once you do this, the financial success you seek will follow naturally. The financial system is designed in such a way that banks and financial institutions benefit the most. But as we've seen, with the right knowledge, strategy, and mindset, you can take control of your wealth and work towards financial freedom. You don't have to settle for what the banks want you to have. By investing in your financial education, making smart investments, and leveraging your own talents, you can start building wealth that lasts for generations. So, what's stopping you from taking control of your financial future? It's time to break free from the constraints that banks put on you and start building the life you deserve. Remember, wealth building is a marathon, not a sprint. But with consistency, knowledge, and the right tools, you can achieve the financial freedom you've always dreamed of. Don't forget to subscribe for more tips and strategies on building wealth. Let's work together to unlock your financial potential. Like, share, and subscribe for more wealth-building strategies.